everybody. Welcome to the TraderMerlin Show. It is your Monday edition. To all the Tesla bulls, congratulations. To all the Tesla bears, congratulations. It was one of those double-edged sword kind of days, and ultimately ended up looking like a candlestick type of formation day. Hello, everybody. Hope you had a great trading session out there, getting prepped for earnings season, which a lot of people I talked to today thought, you know what, bull trap. I know, I was watching my language there. You guys that comment on my cursing thought I was going to swear right there. No, bull trap out there today. As all of a sudden the market started ripping higher and then just gave it all back, looking rather ugly near the end of the session. So all in all, it is setting up to be a very interesting Tuesday, which we'll talk about the earnings here in a little bit. I'm going to give you the market update as well at the end of the show because I know a lot of you are probably just joining us today specifically to know more about the topic which I created today, which was talking about specifically hammer formations. Now, as usual, for those who might be new to the show, I tried to steer the show down the direction of listener comments, and Jeff actually sent in a comment that is this one right here. It says, candle formations. Can you review when you take trades off of hammer, spinning tops? Are the candles allowed to have wicks on both ends, or does it make it invalid? Well, there's a lot of different pieces to this, and I said, instead of doing the whole broad how you trade every candle formation, I said, why don't I go down to my favorite ones, and I'll explain just my favorite today, and then we'll see if I have time. Maybe I can expand on those. So for those of you who are new, do me a favor, click the thumbs up button if you like today's content. Certainly click that subscribe button and the little bell as we do 3 different shows here. We do a market outlook show on Sunday, chart of the week on Saturday, which was an interesting one with Elon Musk yet again, and then of course our live daily show. That said, let's go to our topic du jour. I'm going to go and show you. I was trying to find a nice catchy little intro graphic for it. So I made this one today, and it says how to trade hammer formations. And of course, this goes out to Jeff, and hello everybody who's with us today. Gayer, Marshall, Terry, Kevin, Tom, yes, MC Hammer theme, of course, but I figured with candlesticks, I want to make sure that you can touch this. Huh? Like that? Like I did that one? Hello, Jeff, as well. Good to see you with us. Brian, Big Eb, Thomasina, Ibs, and Marco. Always a pleasure having you guys with us. When it comes to trading these formations, I'm going to start off rather basic here simply because we have such a diverse group. Some of you are very experienced Online Trading Academy graduates. Others of you are coming in maybe through a link that you clicked on YouTube or Facebook and you're going, I don't know much about trading. So I'm going to go through this as I would teach it in a classroom environment where it's going to be very basic up to all of a sudden the mechanics of structure and all the execution aspects of a hammer formation, which we can translate exactly how we trade that onto other formations. Now, I wish I had a big asterisk button right now. I have a huge asterisk right now saying, guys, the way that I'm going to show you how to trade this is how I trade them. That doesn't mean it's the right way. It doesn't mean that you guys have to trade exactly my way. You have to experiment with your personal preferences. I just set these rules in place because I found I made too many mistakes when I left it open to interpretation. So let's start and look at the candlestick stuff. I know. Tom's like, oh God, the basics. Don't worry about it. Yes, there it is. That's what we would call a hammer formation. Of course, those of you who are experienced would say, well, that's not necessarily a hammer formation because it depends on the location as to where you find this candle. So, of course, as you guys see on the show, I look at a lot of different time frames. I look for candles on the daily chart. I'm looking for them primarily in the daily chart because that allows me to scan and filter ahead of time. So for tomorrow, I've already got a small list of candidates for potential shorts and one candidate for a potential long trade based off a candlestick filter I just ran about half hour ago. So basically, if this was a daily chart, you want to know that this is made up of other activities. So if that candle that you see on your screen right now is a daily candle, it might be made up of intraday, let's say a 5-minute chart that looks something like this. And at the end of the day, all that 5-minute data is compressed in the one candle, which gives you, obviously, the candle that you see on your screen. So the question from Jeff asked about, oh, okay. Thanks, Tom. The question that Jeff asked was, can it have topping and bottoming tails? Okay. I'm going to show you a bunch of different ones here. And I just say, what is it, right? I'm going to put on 5 different candles here. So you see that second one, right? For those that don't know terminology, let me go back one real quick. The way that you read this is, this candle right now has 4 pieces of information to it, okay? Am I able to share that scan? Yeah, I'll show you. I'll show you the scanner, Brian. No problem. This candle you see here right now represents 4 pieces of information. It opened at the bottom of this green box and closed at the top. I know that because the box is green. If this was a red box, it would have opened at the top and closed at the bottom of the box. We know that the high of the day is exactly where it closed at because there's no topping little tail here, and the low was all the way down here. That's what makes this a hammer formation. Now, what about if I go to the next one here? It's still the same 4 pieces of information, right? It opened at the bottom of the green box, closed at the top of it, but at some point it was actually just slightly higher where the top of this wick is. That's what this is called, a wick, a tail, a shadow is what people like to call them. All of these candles have the same range, meaning the high and low is the same, but would you call that a hammer formation? Structurally, it does qualify, and I'll explain the structural qualifications here in a minute, but you're looking at something that was generally more bullish than it was bearish, closed near the highs, so sure, that could be considered a hammer formation. How about that one? They're all basically the same thing. They're just slightly different with relationship to where they closed, opened, etc. But the main theme you're seeing there is that they all have long bottoming tails. This portion of the bottom is much longer than the body at the top. So what Jeff is probably going to ask is, well, could you have a red candle? Could that be a hammer as well? The answer is yes. You know, if I were to take these two candles, and I have to get my drawing tools out here because I didn't have time to prepare all this stuff, guys. I apologize. I just kind of was making stuff up in here for the show. If I take these two candles here that I'm putting the red box around and say, which one do you like better? Well, without question, I prefer the green candle, right? The green candle tells me it closed at the dead high. The red candle says, well, it closed a little bit off the high, right? It closed right here at the bottom of that red body. So there was some weakness coming in at some point near the end of the day. Obviously, the green candle would be my first preference. This would be my number one that I'd like to see because it's showing me a couple things. I always make this kind of stupid running joke that says, and this is probably why I'm single, if you ever have an argument with your significant other, which is most important, the first word or the last word? And all the men are going, buying them flowers, right? All the guys are going that. To me, this is the same thing. Think of it as an argument or a battle. You know, it doesn't matter if someone's winning the war in the first couple of days or the one who actually puts the exclamation point on the war and says, I won, right? It's the victor that matters. Well, if we look at these candlestick formations, who is the victor in this middle candle here? I'll take it all the way back and remove some of this annotation there. Who is the victor in that candle right there? Clearly the buyers. But what makes it interesting is at a certain point, the sellers were winning, right? The sellers had pushed this thing all the way down to here. At one point, this was a gigantic red candle. And for whatever reason, the market pushed it all the way back up, and all of a sudden you see it close back near the highs, and that means that momentum is to the upside. So these are like kind of those reversal formations where you see momentum change, shift directions, and now move the opposite way. So that's the basic look of it. Now, yes, it can have multiple looks. It can have a green body, it can have a red body, but the key is it really has to be up in the upper end of the range. And I'll give you an exact specification here soon. So to put this in perspective, I wanted to do something that was timely and real and went for like today. So I pulled up a chart of Molson. This is the ticker symbol TAP. This is the chart of today's trading, so I'm not, cooking the books or making up a bunch of garbage. I wanted to show you this one because for those who don't really understand how candlesticks are constructed, you'll see exactly what I'm talking about right now. Now, on the left-hand side of your screen, you see it says daily bar. Okay, what I'm going to do is as we read what happened on this 5-minute chart on the left-hand side, I'll be building what the daily bar looks like, or daily bar for now, and then I'll turn it into a candle. So the first step is obviously taking your low price and your high price of the current trading session or whatever time frame you're looking at. And then that defines your range, meaning how much did it move? In this case, it looks like Molson traveled from about 33.68 all the way up to 34.70, so about a dollar trading range today. Of course, we do know that ranges define risk as well, right? If I get a range that's 20 cents, where's the trading opportunity in there for me? If I have a range that's $1.50, $2, there's a lot of meat on the bone for me to trade. So another thing for you guys to take into consideration is the trading range. Okay, so we've got the highs and lows established for this bad boy. I'm now going to take the opening price and put a left hash mark on that range, and then I'll take the closing price and put a right hash mark. And what you have here is what's called a bar chart. Same thing, it's got 4 pieces of information, actually 5 pieces of information. You have your open, your high, your low, your close, and your trading range for the day. All a candle does is take this and color it in. Since we know that this chart closed lower than it opened, we can tell it by looking at the 5-minute, but we can also look at the bar, and this left hash mark, remember this is where it opened. If I can write O-P-E-N, I can't write with a mouse, man. This is a challenge. Open, and then I'll just put CL. And there's your close. If I go forward, you'll see we just painted in, and that's what your daily candle looks like. So that to me is a hammer formation. Now, of course, where did this one take place is critical. Just for giggles, you guys notice on this chart right now, you can see a hammer formation that was, not only was it a fairly decent hammer, it was actually in hindsight, a fantastic one because it followed through and had a huge up move. Can you guys see that one? I know I can't zoom in on it on this platform here, but you notice it right around 7:05 in the morning Pacific time, after that aggressive sell-off in Molson. You see it went all the way from 34.60. It bottomed out at the dead low of the day on the tail of a hammer formation. So you could be using these things intraday. I find the use of them better on the longer term time frames. So let me go into some rules here so we know exactly what I'm looking for and what the filters are, etc. Rule number 1 is that the body of that candle, the body is simply the difference between where it opened and where it closed. In the previous example, that's that little red body, red piece. So this right here, this area right there is considered your body. Whatever color that may be, red, green, doesn't matter. You don't want the body to be too wide, but bottom rule number 1 is it closes in the upper third of the candle. So if it's in the middle of it, that doesn't count. That's not a hammer. That's just going to be a spinning top. If it's in the bottom third, it would actually be something called a shooting star, which I would say is hand in hand my favorite pattern. Hammers and shooting stars are the same thing, just exact opposites of each other. Rule number 2. It must have a tail down into demand. If you're going to be looking at these things from certainly an investment perspective, you want to make sure that you're using these in conjunction with supply and demand. Using them by themselves, it can work, but the odds aren't as good as identifying where you see an influx of buyers or an abundance of sellers and using those as pivot points for the tails on those hammers or shooting stars. So that's a really important one for me. And rule number 3, I think this is a critical of all candles, is its direction. In this case, for a hammer formation, it's most powerful and it should be viewed when it's at the bottom of a downtrend or during a downtrend, because we may not know it's the bottom yet. So looking at the hammer formation at the bottom of a downtrend obviously becomes one of the more powerful shapes. Now, I'm hoping that at this point everybody is still with me. That was a very basic overview of not only what is a hammer, how it's structured, how it's built, and now we're getting into kind of how the setup and criteria are for it. So if there's any questions, send them in right now. I will run through those, and then I'll go into my rules for trading those, and then I'll show you some that are setting up potentially for tomorrow. Jeff says, would take the same trade off a green candle or a red candle. Yeah, you could say you could take. So if we had the situation back where we had, let me real quickly show you that one. Share the screen again. Let me, I'm hoping I could get you guys to remember all these shapes, okay? If you look at all these pictures right here, when I go and show you the chart for Molson, I didn't actually have it on the daily chart. That's, I'll check it out. It doesn't matter too much which one I get. Do I have my preference? Yes, absolutely I have a preference, right? You know, and think of it like this. I'm a big fan of avocados. I have 4 avocado trees on my property, but I still go to the store and buy them, right? They're ridiculously overpriced, but God, they're good and they're healthy for you. You could have 5 separate avocados, just like this example. They're all avocados, but you know, one might you just look at it and go, oh, this one just feels perfect. That to me is what Japanese candlesticks are like, especially with hammers and shooting stars. These all basically tell you the same story. At some point, it was very weak, and then all of a sudden, it came ripping back and closed near the highs, telling you that the buyers were in control. That's the essence of a hammer formation. Which one would I rather see? I'll give it to you in actual numerical preference for me. Let me get my pen on here again. Number 1. Oops, darn it. Hold on. I turned the pen off. If I had to choose which one I want the most, it'd be this one right here. Number 1, in the middle. Number 2. Oh, it's number 3 is a real toss-up. I'll say number 3, I'll say 4, and I'll say 5. I'm still going to trade them the same way. So when I go and show you my rules for trading them, it's the exact same regardless of picture. It just gives me more confidence when I see the hammer formation as number 1 because of the way that it finished. It finished at the dead high. There wasn't an ounce of doubt in this bad boy. It closed solid, dead high. Number 3, there was a little bit of doubt, right? It didn't close at the high, but it was off a little bit, but still bullish. Number 5, it's closing off the high, and it's actually starting to look a little bit weak. So, you can tell the story of the battle. Every time I see you guys look at these charts or hear about you looking at these charts, I want you just to think it's a war. That's the simplest way you can put it. It's a tug of war. It's a military war. It's a battle between two forces, and that is it. Buyers versus sellers. And you can say, well, it's institutional buyers, it's retail buyers, it's algo sellers. I don't care. It's a battle between all of the ones that are buying and all the ones that are selling. And ultimately, we get the end result, which is that chart formation. So let me go forward here. I got to skip a couple slides because And now I'm going to go into this here, which is how do you trade them? It's really many, many years of me looking at these chart formations and finding out which one fits best. I will tell you that I have painstakingly gone through and looked at my trades and figured out that a lot of times I jumped on a candle too quick. So say, for example, the market's about to close. It's 10 minutes before the close, and I look over and I see this candle on the screen on stock XYZ. Back in the day, I would just buy it. I'd buy it right before the close. Take that thing home overnight. Why? Well, because it's finishing strong. It's barreling to the finish line. It's got momentum. It's going to gap up tomorrow. Sometimes it did. Sometimes it didn't. And I found that for me it was a crapshoot. So I said, okay, I'm going to wait for it to confirm for me. So then what happened is the next morning it would gap up. Big gap up. And I'd jump on it, buy it right away. And all of a sudden it would come ripping back down. You're like, oh, gosh. It did what I thought it was going to do, but it was on the gap. That makes sense to everybody. So I started to say, okay, let me just refine this down, put some rules in place so I can be more systematic about when I see these. So here are my rules. These are mine. They don't have to be yours. I'm just giving you a perspective of how I would trade them when I see them. So please, if you end up trading these things, you're like, I lost money on it. I'm sorry. This is the way I trade it. So these are my rules. You can always modify them. Rule number 1. First off, I want you to go and mark off the high of the day. So let's remember, I look for it on the daily chart. So there's the high of the day. In this case, I put high of the candle, but really this is the high of the day since it would be a daily candle. Next, I want to make sure that the candle must open below. So let's say you see this new chart forming over here. This is the next day. Boom. We got the next day is on the right-hand side of this. Oops. Jeez. I guess you got to turn that bad boy off. Getting crazy with the pen on you guys. Sorry about that. And unfortunately, I can't erase all this stuff. I had a glitch in my software, apparently, and it won't let me erase all of my... So I don't know what's going on with my pen. See if I can get this back here. Hold on. Oh, the beauty of doing live stuff. Okay, let me see if I can delete that. Huh. It won't allow me to erase anything. Okay, well, we're stuck with that, unfortunately. So, as I mentioned, rule number 1 is it has to open below the high. Not above it. If it opens above that high, the trade is off. It doesn't matter. I'm ignoring it. I want it to open down below the high of the previous day. And then, if and when, or if it ever does, crosses above that high, then there's your execution. All I've done is taking something that can be very arbitrary and set rules to it and set parameters so that I don't get caught off guard doing things that I probably shouldn't be doing, rushing into a trade for no apparent reason, etc. So I try to take a topic here that could be gone on for hours and hours and hours and hours and really simplify it to the nuts and bolts of it, which is a very, very basic approach. You saw this a couple weeks ago. I think it was Adobe and TMO were two that we were looking at for the exact opposite pattern, which is called a shooting star. So, for example, for those of you who might not know what formations are, if you took this and just flipped all these upside down, and let me see if I can do that for you just because I have some skills in the graphic design place, especially doing things live. If I was to take this and spin it, actually, let's do this. Oh, never mind. That's not going to work. Son of a... Well, that would... Maybe not. All right, I was bragging about my skills in PowerPoint, and they just aren't that good. We can call that a red squiggle. Thanks, Mark. Well, I apologize for that. I'm trying to do stuff live here. Sometimes it gets a little bit messy. I'm doing the best I can. All right, I'll show you on some live charts here in a second. Going back to Gair's question, would you use it on a 1 minute chart? Not really. This goes back to Bob Dunn's comments, which, he and I have butted heads on this many times because he almost makes it sound like people who use intraday charts or shorter term time frame charts are just losers. That's just the impression. He's like, you got to use bigger time frames. I totally agree with him that you should be looking at it in a bigger time frame. The reason I like to look at this on dailies is it's easy for me to find them in filters and scanners. And a lot of them, these scans and filters, are pulling up bad information, right? They're not pulling up the best quality hammers or shooting stars. So I like to find them there on the daily, and then I could be refining down and looking for executions on, let's say, the 15 or the 5. I don't use 1 minute charts anymore. I haven't done 1 minute charts for a long, long time. 5 minutes about as small as I go time frame wise, and I think we've had this discussion as to why. A lot of times you'll find yourself being stopped out or jigged out because of all the fluctuations on a 1 minute time frame. You get a little bit frenetic and focus on that short term, so I don't use them on a 1. Now, let's say you had an aggressive market sell-off, and it came right in to a demand zone on a 5 minute chart, and it had a hammer formation. Would you count that? Yeah. Heck yeah. Absolutely. I would count it on a 1 minute time frame too. It's just, 1 minute time frame isn't really, it's not giving it a lot of time for that battle to form, if that makes any sense. Okay, so questions, keep them coming in. If you got questions, I'm going to bring up a platform here, and I'm going to show you a couple of different ones. We'll start, we'll do our top 10 in a minute. Let's look at TMO, just because I want to go through some of the rules. So you guys notice on TMO, these are shooting stars, by the way. Notice that they're exact opposite of the hammer formation. I'll make a full screen for you, and hopefully this is going to be nice and big. So there's a hammer formation, or shooting star formation right there. I think you guys all saw that. We talked about it on the show on that specific day. I said, hey, tomorrow I'm looking at this as a potential short, and you guys heard me say this. If you don't believe me, go ahead and rewind the show and go check it. I know people say, you never said that. I did. I said if we open up above 397.68, and then we come back down below 379.68, then go short. And notice what happened the next day. It didn't do it. So who cares? Move on. Next trade. But notice this pattern that you see right here. Do you see this next day on TMO, it formed another, it's a shooting star. It's not as good. It's still closed in the lower third. So we could have said the same thing. The next day, if TMO opened up above 382.53 and then sold off below it, great. Potential short trade. Oh, didn't do it. That next candle, not a spinning top. Okay? Now it's all of a sudden following through, but just showing you that I'm not worried if I miss those trades. Who cares? Who cares, right? All right, let me go to the other one, ADBE. Adobe. Wow. Same day, guys. Same day. We were looking at this shooting star right here. And of course, now in hindsight, everything sounds like it would be great to have taken, but it wouldn't have made the trade, right? There's that same shooting star, though I have it on the body. I go to the tail. We said if it gets below 448.72, potential shorting opportunity. Did it get below 442? No, it didn't. Done. Ooh, that's a great question, Batani. Real quick, let me just show you guys this one. I want to show you an example of what we just talked about, okay? So let me, before everybody looks at it. How about this, guys? What would you say to this one? You see on the hard red edge, on Adobe, you've got this nice hammer formation, right? It's at the end of a 5-day downtrend. I put a line across the top, which is 428.48. And we can make the argument that if it opened up somewhere down below 428.48 and then rallied above it, we would go long. You could also make the argument that it came pretty damn near down into a demand zone. Very close. It's not into it, but pretty close. And then, so the next day, what happened? It opened up down below that line, sold off for a little bit, and then ripped up, right? Had a great day. And what's so great about what I just showed you is, on the other ones, on the TAP and on the TMO and on Adobe, where we didn't make the trade, so what? Go back to golfing. Go back to sleep. Go do something else. You just didn't make the trade. In this example on Adobe, it's a great one because, okay, it met your criteria. It would be better if it was down into an area of demand and really rocked out of there, but it's okay. But you got the follow through. So set those rules for yourself. Which one, Dana? There's a couple bearish engulfings in this bad boy. Batanai says, so on whatever time frame, rule is to wait for the candle to close. Yeah, no. This is, okay, this is your absolute matter of personal preference. For me, it's not closed. So let's go to, what do I want to show you as an example? Let's look at TAP. That's the chart I was just showing you in the example that I put in PowerPoint. I actually took a screenshot of TAP. But here is Molson. So you guys can see that when we did the build out example where I show you how a 5-minute chart makes a daily candle, you guys can see that's this red candle right here. All right, that candle is, bear with me, I want to bring this up real quick because I think it's important. That candle is this chart. So this entire 5-minute day that you guys see on the screen right now is the last candle on this TAP Molson. So the question would be, how do I trade it? All right, well, tomorrow, and let me just tell you, I'm not a big fan of this one. I don't like the hammer per se. It's not really at the end of a downtrend. Yesterday's candle, or Friday's candle, excuse me, made me not feel very confident about this one. But it's the only hammer formation I could really find right now. Okay, so 34.74. You notice 34.74 is that high price there. What we could say is, all right, tomorrow maybe I'll watch this on a 5-minute or a 15-minute time frame. And if all of a sudden it opens up down here, let's say $34, and slowly creeps its way up, or even quickly moves up above this 34.74 mark, I'd buy it into a candle as soon as it broke above it. You might give yourself a buffer and say, okay, maybe it's 5 cents above it or 10 cents above it, whatever you want to do. But you don't want to wait for that candle to necessarily close, because if it's a daily candle closing, it could already be a huge move. And that's why we were watching it. So if that makes sense about tonight. Hopefully it does. Is there a way to do a set and forget on hammer and stars, or you'd have to set it and monitor? There is a way. It's actually rather complex to do so. But I'll walk you through. Let me see how much time I got. Yeah, I can walk you through. I'll show you. So let me give you a couple resources and show you some scans and filters. So here's a site. This one's called Stock Fetcher. It's funny because Brandon Wendell used this one years ago, and I was actually piggybacking off his account for a while. Thank you, Brandon, for that one. But he no longer has an account. I don't think you guys necessarily need to pay for this stuff. I'm sorry, Stock Fetcher, but you give enough for free that I think we can just take it from there. You don't need to buy it, guys. I'm not telling you to go out and buy anything. Please, just I'm a big fan of free. Free is good. So here is Stock Fetcher. And I'm right on their front page, and you notice here it says MA 1350 bullish cross. So this is just looking for moving average crossovers. I can go down here and you see it says candlesticks. There's a whole bunch of other stuff that you can filter for. So candlesticks. And notice you got dark cloud covers, dojis, hammers, long-legged dojis, morning stars. Let's just go for hammer formations. I'll just tell you right now, there's not going to be a lot for today. There's not going to be many because we are more in a shooting star environment, right? The market sold off aggressively near the end, so most likely we are going to have shooting stars all across the board. But we'll just try to look for hammer formation. And what I want you to understand here is how these formations sometimes are garbage. So bear with me. I'm going to try to get both things up on the screen right now. I just got to share some real estate. Okay. And I'll put the list just so you guys can see just the ticker symbols. Okay, that should be good. All right, so we've got ASHR is the first one that it's calling for. ASHR. It says that that's a hammer it says that's a hammer formation. My guess is it's actually going off of this candle right here, which I would say, okay, it's a hammer, but it would not be a good trade for me. I wouldn't even be interested in this one. How about CNX? So CNX yesterday had a hammer. So this is actually a day late. It's just not pulling up candles yet. Maybe in like an hour or so it'll update. It's probably got a delay on it before it filters. This yesterday was actually a pretty decent one. If I was to show you the chart like this, gosh, this is tough doing with so many damn windows. If I was to show you that chart right there, I'd really be interested in this one. Why? Well, because it's forming a double bottom. It's got a hammer formation. Oh, I got to move this chart one sec so I get my drawing tools. Okay, you've got a double bottom, hammer formation. It's a red candle, that's okay. I'd say, if it rallied up above 853 as a potential trading opportunity there. Well, you actually had one, right? It did rally above that today on CNX. And let me show you on a 5-minute time frame what that looked like on the break. But boy, what a heck of a sell-off. So there you had it. You had it right on the open. So it opened up at, its opening trade was at 851. Your trigger price would have been 853, It rallied all the way up to an intraday high of 8.79. So it's not like you made a ton of money. It was only like 25 cents on it. But the point was, this was all based off of a hammer formation into a demand zone. Now, if I go back to the daily here, a lot of these look like junk. BJ. That's funny. It called yesterday's pattern a hammer formation. I think that you guys could all see right now that this looks like a beautiful shooting star. This is the opposite of the hammer formation. This to me looks like BJ's wholesale club holdings could be a great short for tomorrow. I'll zoom out just so you guys, or sorry, zoom in so you guys can see the, look how long this tail is. This is one of those ones you just look at and go, hallelujah. Holy cow, what a gigantic topping tail. That means that this thing was, it opened up today, opened up at 38.88. It hit an intraday high of $40.10. That's a pretty decent move. You're talking $1.30. That's pretty decent for a $38 stock. But it ended up closing almost dead low, right near the bottom. Total shooting star. What I would do is just look at the weekly and say, hey, did this rally up into anything noteworthy? Probably not. It's probably to all-time highs. Yeah. Wow. Talk about it. That's just an incredible looking chart right there. So this could be a potential short on the daily. What I would do, similar, I would say wait for it to open up tomorrow. If it opens up above 38.86, great. If during that period of time it starts to fall and then falls below 38.86, you might have a nice short trade on your hands, and that's one for tomorrow. So how about SPEM? I'm just running through the ones at StockFetcher. Again, it's got a hammer formation as yesterday, and I don't really like this setup. Now, TradeStation, I see some of you saying, Chuck says you can also write an easy language script in TradeStation to search for hammers and shooting stars. If you're like me and not a fan of writing code on anything, then you don't even have to write it. You can literally go into the setting here, and you can add them in. It's a study. So right here I have, that's how I was attracted to Tap Molson today, because it's showing up as a hammer. And then notice the amount of shooting stars here. All of these 9 companies, if they have a price in this column, that means that they're in a shooting star formation on the daily. So here's ZBH. ZBH has a decent shooting star, not great. The body's a bit big. Here is IBM. It's okay. VMC. There's a couple in here that I actually really liked. General Mills and Weyerhaeuser were great ones. This one's great, but it's got a big body on it, and it really didn't come into supply. General Mills. How about that General Mills chart? Yeah, Tesla kind of is. Big Eb says, I think Tesla was a shooting star. I'll show you that one in a second. If my memory serves me correct, because I looked at it near the end of the day, its body's too big. I don't know I'm being picky, but look at the shooting star on General Mills. General Mills closed almost the dead low of the day. This is one that's beauty. What I'd love to see, and this is kind of one of my own little odds enhancers I like to look at, is I like to add in volume. Just if it's climactic volume, which it's not climactic volume, but you can definitely see elevated volume today, meaning that fear was in there and it was driven up off of greed and all of a sudden came ripping back off of fear, and that elevated volume tells you that fear and greed were present. So I actually like this one. This would be a great potential short for tomorrow. The only thing I haven't looked at, are we coming in overhead supply? My guess is we are like everything else. Oh, we're not at all-time highs. Oh, look at that. Beauty. I think this topping tail came right into that. Yeah. Right into that $65 mark, guys, which is exactly where we... Oh, man. I know you guys think this might be a long time ago, but if you look at the September 16th, 2016, there's this small little area where all of a sudden it ripped out of, right at $65. Today's topping tail or the weekly candle's topping tail goes right into it, and the daily is right there as well, up into 65. That's gorgeous. So you had a lot of reasons why. And I've been wanting to mention this, and I was hoping I didn't forget it, and I won't. One thing that has not come up in the chat, and I'm surprised it hasn't come up yet, you guys are usually all over me for this stuff, is you should have made the comment that went like this. But Merlin, aren't these lagging? If I trade a hammer formation or a shooting star, aren't I leaving money on the table? And the answer is 100% yes. Absolutely you're leaving money. What's great about a hammer formation, so let's say you were trading General Mills, and you saw that supply level all the way back to 2016, you had it mapped out, and you took a short when it got there. Rallies up, spikes into it, and you're saying, all right, I'm going short. And at the end of the day, you've already got a position on, and at the end of the day, you see it form a shooting star formation. Do you close your position, or are you thinking, boy, this could really start to have an even bigger move to the downside tomorrow? I'd probably hold my position, and I'd be eager to add more to it using the confirmation stuff I just told you. So, a little bit different. Is all this YouTube stuff included in your book? No. My book is more, it's more what I want to do like with Jesse Livermore's, which is about experience and the real, like, the emotions and pain and euphoria that you experience and kind of learning lessons along the way. I know, I got to get that thing going. All right, let's continue on here because GIS was great, but my favorite one on this list was Weyerhaeuser. WY is a ticker symbol. It's not the best shooting star. It did close near the low. Not a really long topping tail, but you are coming right up into that area of supply. You notice that candle that goes all the way back into early June, we spiked right up into it and then started to show a topping tail. So this one in General Mills I like as potential shorts for tomorrow, based off the exact same criteria I showed you guys how to use for a hammer formation. Just flip it all upside down because a hammer is the exact opposite of a shooting star. And as long as that shooting star is in an uptrend, you've got your odds in your favor. All right, let's see. Do you just do a stock short or do options single leg buy? I'll do whatever. A lot of times I will trade the equities to get more firepower. I will use the options as well as a directional play, so I have no bias there. I think trading options is fine. My only challenge with options is this. Options are much more complicated to execute, right? You have to go through and you've got to find the right strike price that you're willing to buy if you're buying puts or if you're selling calls. You got to find the right strike price. And then you got to go through and go through that bid and ask and negotiate it and hopefully get filled. You could buy it at market, but sometimes the spreads are so big it becomes more of a pain in the butt. And then you got to make sure that you're buying those versus selling, and then it gets complicated. Whereas, for example, I traded Akamai today. I had a nice little short on Akamai, which I'm still holding short overnight, which I normally don't do, but it finished so weak. I said I'm keeping that one overnight. It's easy for me just to go market buy, market sell on the price of a stock. I don't have to go through and find the right strike based off the deltas and all that stuff. It's just a little more confusing. So if I have more time, I would prefer to use the options side of thing. If I'm day trading, I need speed. Speed, not as in crystal meth, but I need to have the ability to real quickly hit a button and execute. And I don't have that when I trade options, or at least I'm not that good or that quick with options. Merlin, if the shooting star is in an uptrend, wouldn't it be going counter trend? Yep. How do we enhance the odds in that case? I think you're absolutely right. Anytime you're using a hammer or shooting star formation, you're going the opposite way of the trend. That said, there's also, remember, markets are fractal in nature. So let me see if I can paint a better picture with, let's start with GIS, because GIS was a good example. We could all say the GIS is in a long-term uptrend, but right now it just feels like this was a bull trap. It's a bull trap because we've been going sideways since May in General Mills, right? It really, I know I'm drawing a wide box here, but bear with me, guys. Just, nothing is ever perfect. But, I mean, I think you guys can all see we've been stuck in this even longer than May. It's going back into April. It's just been going sideways, 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 sideways. And yes, it has big swings. So would you call this going counter trend? I don't think so. I think this is actually a bull trap. I think the market got you with the bull trap today. It broke out of sideways consolidation to the upside and all of a sudden came ripping back down because all those long traders were waiting for a break and they got it today and then it came ripping back down. So I don't know if this one is necessarily going counter trend. What about, what's the other one I wanted? Weyerhaeuser, WY. Same thing here. I mean, we are in an uptrend. It almost feels like we're forming an ascending triangle here on Weyerhaeuser. The point here is, where do you go from here, right? If you're going to short this and you're saying, hey, I'm going counter trend, what's your target become, right? I think that's the key here. So I'm going to draw crude charts. I know you could do this in multiple ways, guys. This is the thing I hate about technical analysis is you draw trend lines. And you can draw them from almost anywhere. Right? My old buddy used to say, if you torture a chart long enough, it'll tell you anything you want to hear. I'm drawing a whole series of different trend lines on here to make a point. If I'm going short on this shooting star formation that we see right now, where do you think it's going to go to? You're going counter trend, so I doubt that it's going to drop all the way down to 17 bucks, right? Probably not. It's probably going to drop down to somewhere right around 22.50. Okay. Well, if there's enough meat on that bone for you to short at 23.75 and get out at 22.50 and make enough money, then I think it's worth it. There you go. No problem, Taylor. And hey, Bald Head Bees, thank you very much. I appreciate that. I enjoy doing it as well. Good to have you guys participating in today's lesson as well. It's awesome. Thank you so much for the contribution. I do appreciate it. TradeStation has a show me. Yes, you can. It's actually kind of cool. You kind of have to be used to it. So let me go here and show you. For those that want to learn and are using TradeStation. And we'll see how long I'm using TradeStation, guys. They're giving me a hard time about my account right now, and I'm like, okay, you guys keep messing with me. I'm going to just use a different platform. But let's see. You go insert analysis technique, and they've got a couple really cool things here. There's a show me and a paint bar. I'll do show me, and I'll just do shooting stars since there's more of those and it's by itself. So you run this one, and what it does is it puts a little dot. Unfortunately, the dot's a different color here. I'll see if I can get it to change the color of it, and I'll make it a black dot. So what it does now, it's going to put a black dot on every shooting star that it sees on this chart. And there's only one right there. But let's go to Adobe. Yeah, it can't be working. Maybe it's just the most recent one. I mean, it might be just the most recent one, Mark, because it should have been picking up these. This candle right here is a beautiful hammer, and it didn't pick up that one. Maybe it's just for today. I'm trying to see if there's any other dots. I know that there was a show me one that used to do it on every one that you'd see. But yeah, I don't see. Yeah, see, it picked up BJ's, but it's not giving me a shooting star warning on that one. That's kind of weird. Not sure. Want me to go with Thinkorswim? I might open a Thinkorswim account. I might. We'll see. All right, it's funny because that's one of the few accounts I don't have. I don't have a Thinkorswim account, but I have accounts like almost every other brokerage firm out there, which I'm telling you is a nightmare when it comes to tax time. I hate it. I got so many damn accounts. Anywho, let's see. What do I got? Any last ones? Do you use all this? Do you use this for all the assets or just stocks as confirmation of supply and demand? Great question. I prefer it in the stocks. I prefer it in the equity markets, but do I use it in the futures markets? Sure. Do I use it in the forex markets? Absolutely. I think it's no matter what, you can't mask the patterns that repeat because of human nature in buying and selling, right? Those shooting stars and hammer formations are going to pop up all of the time. And I do have a lot of is it PayPal? Let me see if I can change that one. I lost my train of thought there. That's what I get for reading chat. Let me see if I can change that to a paint bar. I used those in the past, but I didn't really. It should show me, but let's go shooting star. No, it's not a paint bar. Not for the candle bars. Anyway, I'll leave that one. Merlin, as you know, several instructors rotating now have their own thing. What are your thoughts? Who do we follow? Look, you follow who you like. You follow who you're comfortable with. You follow who you trust. Everybody knows my feelings towards one particular individual, and unfortunately, a really good friend of mine has gone to work for that individual, and and it's sad. I won't let him on the show. Yeah, you don't want to learn from me. Everybody's got their own unique styles, and this is why I think in the long run. Here's what I think long run. I think in the long run, if you go with one individual, I think you're limiting yourself. So, Gabe Velasquez just started his thing. Love Gabe. Gabe's awesome. Ryan Watkins did. Sam Evans did. These guys are all kind of going off and doing their own thing. Great, I support them. These are all stand-up guys. However, for me, if I look back at what really helped me out the most in my 20 plus years of doing this, it was the ability to be in an environment where I could immediately bounce ideas off of other traders. So community is number one, but not just my peer group, but also the instructors. And I found that, when I took my class back in 1998 with Fernando Gonzalez, it was great to hear from Fernando, and then also from other great traders along the way. I've learned from a lot of the people that have come through the doors at Online Trading Academy as instructors. A lot of them are my really good friends. A lot of educational entities don't give you that ability. You've got one guy. This guy, Warrior Trading. You're trading with one guy's opinions about the markets. You'll never see his trade sheets. You don't know how he's doing. You don't know what he's doing, but he's giving the impression that he's just doing amazingly, and therefore you should sign up. To me, it's about the pool of people that you're accessing. A friend of mine years ago, he was doing a presentation, and I didn't really like the way it was going. He did this in front of it was a prospect for Online Trading Academy's classes, and he goes, "Who do homeless people hang out with?" He's like, Silence in the room. He's like, other homeless people. Who do professional baseball players hang out with? Other professional baseball players. Who do professional traders hang out with? Other professional traders. And I think you want to put yourself in an environment where you have access not only to your peer group, like you guys are actually kind of creating your own little peer group in here, right? I mean, I see Brendan's not here today. He's probably out finishing up his house or is selling his house, but he's always contributing. And a lot of you guys are contributing and sharing information, which I think is amazing. In a limited environment, you can only learn so much. And if one instructor is your lead guy and the one person that you're learning from, you better hope that he's doing the right thing and has the right skill set. And sometimes you might not resonate well with that instructor. A lot of people do not like the way that I talk and the way that I present. I feel I'm too crass, a little too rough around the edges. I'm not polite enough. Hey, I'm sorry. Trading's a tough love world. If you don't like it, beat it. Right? I mean, the market will kick your butt quicker than anything. So I can talk rude because the market will do what's much ruder, which is just take all your money. So I'll be honest about it. But yeah, you got to find out who you resonate with. I had a couple people I really, really clicked with. I've actually had some people over the years, even online trading academy instructors. I just went, this guy just doesn't. I don't know. I'm not learning from this guy like I do. And that's nothing against that person. It's just my brain is wired for a specific way of education being delivered. And every instructor is going to do that differently. Yep, exactly, Josh. Josh says that way you find out it fits your personality. Yeah, and that's why I'm not jumping ship at Online Trading Academy. I'll be there forever because of that. I think that it's funny. Every now and again they ask me, said, "Hey, do you want to go do this and do an XLT or a mastermind?" I'm like, "Sure, why not?" I'm happy to share my perspectives on the market with the audience, and if people like it, great. If they don't, that's okay too. But I think you need to be in an environment where you have access to a lot of different opinions and people and marketplace ideas because no one person is going to be right all the time. One thing I've learned from certain traders over the years is that some traders will have a rock solid mindset about how to do things and they have an inability to change. So the markets are doing one thing and they are killing it. They're making so much money hand over fist. And then you're going, wow, I want to learn from this guy. And all of a sudden the market mechanics, dynamics, whatever changes. Maybe we just go from straight bullish to bearish market and they're a net buyer. And all of a sudden they're not making money anymore. They're losing. I don't really want to be following that individual anymore. I want to be following the guy who's saying, hey, what's the market give me today? All right, that's where I'm going. And have more flexibility. And a lot of the guys I bring in the program do. It's good. Let's see. Yeah, look, Chris, you said OTA had a great, amazing force. They still do. They've got a lot of great people in there still. So, and I think what will happen is as soon as this dust settles from a whole FTC thing, everything will go back to normal. And then what will happen is a lot of these guys who've gone off to start their own schools will realize how difficult that is, and they'll come back and they'll be part of the faculty again. Just my assessment. Mark Press, when was the last time you knew the market to be PC? Well, unfortunately, I've tried to cut back on my cursing, but I tell you, no matter what I do, these people always give me a hard time for cursing on this program. All right, 48 after, crikey. See, I said crikey. That's not a foul word, guys. I don't need to hate mail on that one. Let me go through what's happening tomorrow. Obviously, tomorrow is a big day, right? I had all these charts up here, got my rules for you. Here's what we got cooking for tomorrow. On the economic calendar front, not too crazy. You do have a rate announcement coming out for Canada tomorrow. That's an important one. Other than that, you have crude oil inventories for the U.S. as well as some industrial production. And that Empire State Manufacturing Index. Keep an eye on that one. That had a pretty big turnaround in the past couple of months, and we'll see if that continues. And that could obviously be optimistic or positive for the equity markets. I had your earnings. This is what it all boils down to for tomorrow. This is it for tomorrow. JP Morgan, Citigroup, Wells Fargo, and you can also throw Delta Airlines in there if you want to watch what an apocalypse looks like. Yeah, Steve, I love it. Son of a biscuit. This is, to me, the beginning of it. I don't know which way it's going to go. I don't think financials will get hit too hard. However, I said last time that I thought financials weren't going to get hit too hard, and all of a sudden they were posting monstrous losses. And that's during a period where 1 month out of the 3-month quarter were on COVID alert and shutdown. this could be potentially worse. They're actually showing right now the numbers are expected to be fairly decent. We were saying loss for Wells Fargo, 55-cent profit for Citigroup, and $1.26 for JP Morgan. I don't know which way they're going to go. I'm not going to put myself in that camp to try to make a bet either way. I'm going to leave that one all alone. Baldhead says, after the close, these are pre-market. So here's a general rule, and it's not 100%. It's just a general rule. If it's an NYSE stock, New York Stock Exchange, it's usually pre-market. If it's NASDAQ, it's usually after the market. Bet you didn't know that one. I love that about NASDAQ because I prefer them to be after market. And what's really weird, maybe we can do a show on this at some point, is watching the differences between an NYSE announcement and a NASDAQ earnings announcement. Just by the sheer volume and the way that things trade, completely different ballgame. The NASDAQ ones are exciting. The NYSE ones, grab a nail file and just bore yourself to death on an earnings announcement. But tomorrow will be interesting to see JP Morgan, Citigroup, Wells Fargo. This will be the beginning of earnings season. There's a lot coming out later on in the week. And of course, from basically Wednesday on, you're going to get dozens of A-list bellwether companies reporting earnings. And this market could go haywire if some of these guys start to miss and lower their forecasts. But we shall see. So far, the COVID impact has not been as bad. Certainly, it's ruining my short position. And I've got about 4 days left to close that one out. All right, everybody, that will do it for me. We've got your economic announcements, got your earnings. Hope you enjoyed that. Chris, thank you so much, sir. Appreciate the contribution. We're raking it in today. You guys are going to get me enough to buy a nice fresh bottle of whiskey for the weekend show. Hopefully, I wish I could have like a whiskey tour a day. It's funny, Rachel, who was on the program on Friday, was saying, hey, why don't we get to whiskey sponsors? That sounds like it'd be pretty good. Yes, this specific individual, if you're who I think he is, but tonight he says, I used to think one guy was the owner of OTA. The way he bragged about how he started everything there, you would think he actually was the market. Yeah, that individual, again, is one who has gone on to start his own school. He will never, ever come on this program unless, he's just got to know that if he comes on this program, I'm going to tear him apart. And he would never come on. It's kind of like Jim Cramer going on the... what's that show? After he did his whole manipulation video, he went on Jon Stewart's show. And Jon Stewart shredded this guy. Now, he got publicity out of it, but the publicity this individual would get would not be very good. Anyway. Okay, cool. No update on it, Tom. I'm still down huge on that position. We're down about, I think it was $54,000 down on that one right now as we speak. My guess is it'll probably be closed out Friday. Unless we have a huge down move, I'll probably take my guess would be about $40,000 loss on that one. Okay, yes, don't get me started. Thank you very much, Chris, and others for the contributions today. I do appreciate it. Thank you, Baldhead Bees. Very much appreciate that one. Again, tomorrow we're going to have Tilly Allison on the program again. We'll start about the kickoff of earnings season. I know you guys probably saw her market video that she does to give the levels for the week. We ripped through one of those, the 320 mark on that SPY today, came right up to that area of supply, and then all of a sudden started to rip back down. So I'm looking forward to having Tilly on the program tomorrow. If you guys have questions for her, let me know. Send them in at TraderMerlin.com, which is, I love the fire picture. I think the fire picture is the better way to go now. Otherwise, you can just go and put them down below the video here on the YouTube page. Of course, if you are new, click the thumbs up button, hit the subscribe button and the little bell. Until then, happy trading, everybody. I'm going to see you tomorrow. Be careful. Earnings season tomorrow.